Imagine hitting buy on a stock with a tap of your phone. Now imagine trading a goat for a sack of grain. These scenes feel worlds apart, yet they're chapters of the same story, the evolution of investing. Hello, and welcome to CapMindGlobal. In today's video, we're traveling through time, from the earliest barter trades all the way to cutting-edge AI-driven wealth creation. It's a journey spanning thousands of years, showing how human innovation transformed simple exchanges into the complex financial world we know today. Along the way, we'll visit ancient marketplaces, the birth of money, the rise of banks and stock markets, and the dawn of digital finance. So get ready for a fascinating ride through history, from ancient trades to AI-powered investing, and see how far we've come in the quest to grow wealth and secure our future. The origins, barter, and early trade. Imagine a world with no money, no coins, no paper. If you needed something, you had to trade directly. Maybe you have extra fish and your neighbor has fruit, so you swap them. That simple exchange of goods is called bartering, and it's how people traded before money was invented. Bartering worked, but it wasn't always easy. For a deal to happen, you needed to find someone who had what you wanted and wanted what you had. If you need a new axe but the tool maker doesn't need your grain, there's no trade. And even if you find a partner, how do you decide what's fair? How many fish for one goat? Without a common value scale, trades could get awkward. People found creative ways around these problems. They started using certain items as an early kind of money. Salt was one popular choice, widely valued and easy to measure. In fact, the word salary comes from the Latin for salt, since Roman soldiers were sometimes paid with it. In other places, people used things like cattle, grain, or shells as stand-in currencies. Everyone agreed these had value, so you could trade your goods for, say, salt now, and later use that salt to get something else you needed. Other challenge was saving value for the future. If your wealth was in perishable goods, it could spoil before you used it. So people traded for durable items they could store. They also began swapping promises to pay later, essentially IOUs. In ancient Mesopotamia, for instance, a debt might be recorded on a clay tablet, allowing a trade to happen now with payments settled in the future. All these early innovations set the stage for the next big leap, the invention of money. By overcoming barter's limits with such clever ideas, people paved the way for the first true currency. This invention would forever change how people trade and set the foundation for the world of investing to come. The invention of money. Barter was a great start, but as societies grew, swapping goods for goods became cumbersome. People needed something portable and universally accepted, a token of value to grease the wheels of commerce. And so, money was born. The first currencies weren't the paper bills or digital numbers we know today, but objects like shells, beads, and metals that everyone agreed had value. Around 600 BCE, in the kingdom of Lydia, in present-day Turkey, came a game changer. The first metal coins. These were small discs of electrum, a gold-silver alloy, stamped with official seals. For the first time, a trader could carry wealth in their pocket. No more herding oxen to market or lugging sacks of grain for every trade. The invention of coins meant trust could be transferred through currency. If a coin had the king's emblem, you trusted its worth. This made trade faster and easier. A farmer could sell his produce for coins, and later use those coins to buy whatever he needed. Money allowed wealth to be saved and reinvested rather than spent immediately on perishable goods. Over time, standardized coins spread across empires, from Greek drachmas to Roman denarii, each helping expand trade beyond barter's limitations. With currency in hand, merchants could travel further, trade more goods, and build fortunes. Money didn't just make buying and selling more convenient. It laid the foundation for the entire financial world to come. With this new invention fueling commerce, trade could expand like never before, paving the way for the rise of vast trade networks and wealthy empires built on commerce. Ancient trade empires. With money circulating, commerce leapt from local marketplaces to vast trade networks spanning continents. In antiquity, great trade empires emerged, their wealth built on the exchange of goods across incredible distances. Picture the Silk Road, not a single road, but a web of caravan routes connecting China to Central Asia, the Middle East, and Europe. Along these routes, merchants carried silk, spices, gold, and ideas thousands of miles. A piece of Chinese silk might pass through many hands, each merchant in the chain essentially investing in the journey, hoping to sell at a profit further along. It was risky. Bandits, storms, and deserts lay in wait. But the potential riches from a successful caravan? Immense. This was global trade millennia before the term existed. And those who mastered it, like the merchants of Persia or the traders of the Arab world, amassed huge wealth. On the seas, the Phoenicians, sailing out of the Mediterranean, and later the Greeks and Romans built their own trade empires. Phoenician sailors braved the open ocean to trade Tyrian purple dye, glass, and cedar wood across the Mediterranean and beyond. In return, they brought back gold from Africa, tin from Britain, and precious goods from distant lands. These ancient traders were the first to venture capital in a sense. They pooled resources to send out voyages, effectively investing in expeditions that could yield a big payoff. The Roman Empire later inherited and expanded many of these trade routes. They built roads and harbors, unified currency across their domain, and protected trade with their legions, all of which boosted commerce further. By trading far and wide, these empires spread products and prosperity. However, moving all that value around, piles of coins and goods, had its own challenges. How do you keep your money safe on a long journey? How do you lend or borrow for a big caravan or ship voyage? The stage was set for the next financial innovation, the birth of institutions to store wealth and extend credit. In other words, banking was about to make its debut. The birth of banking. As trade flourished and money changed hands across cities and continents, people needed a safe place to stash their wealth, and perhaps to borrow some for their next venture. Enter the first bankers. We're not talking skyscraper offices, of course. The earliest banks were often temples and palaces in ancient Mesopotamia and Egypt, dating back as far as 2000 BCE. These temples stored grain, gold, and other valuables from the community. A farmer could deposit his surplus grain after harvest, and the temple might lend that grain to someone else, keeping track of the promise to repay with a little extra. That extra bit was the ancestor of interest. In cuneiform on clay tablets, we see records of loans and repayments, the first inklings of banking ledgers. Fast forward to ancient Greece and Rome. Moneylenders set up benches in marketplaces. The word bank actually comes from the Italian banco, meaning bench. These early bankers would exchange currencies, secure wealthy folks' coins for safekeeping, and lend money to those who needed capital. In fact, Roman bankers, argentarii, could even facilitate long-distance payments via written orders, an early form of checks or bills of exchange. So merchants didn't have to transport all their coin. This made trade safer and more convenient. After the Roman Empire, banking activity slowed in Europe, but it didn't disappear. By the Middle Ages and into the Renaissance, banking came roaring back. Think of the Medici family in 15th century Florence. They started as textile traders and became legendary bankers. The Medici Bank pioneered double-entry bookkeeping, a revolutionary accounting system that kept credits and debits in balance, and helped finance commerce, art, and discovery during the Renaissance. Banks like theirs provided services we'd recognize today: taking deposits, making loans, transferring funds, enabling larger business ventures than ever before. By the 17th century, banking had evolved into a profession and even a tool of governments. The Bank of Amsterdam, founded 1609, and Bank of England, 1694, were early central banks that helped stabilize currency and fund national endeavors. With banks handling the flow of money, entrepreneurs could dream bigger. But some ventures were too large or risky for any one banker or noble to finance alone. The solution? Bring many investors together to fund a project, giving birth to a new concept: the joint stock company and the stock market. Stocks and the first public companies. The idea of sharing ownership in an enterprise was a breakthrough that took investing to a new level. It began in earnest in the early 1600s. Imagine the scene in Amsterdam, 1602. A crowd of merchants and traders gathers eagerly by the harbor and at the market square. The Dutch government has just authorized a bold new company, the Dutch East India Company, or VOC in Dutch, to monopolize the lucrative spice trade with Asia. Outfitting ships for year-long voyages to Indonesia and India was extremely expensive and risky. Storms, disease, or pirates could ruin everything. To raise money, the VOC did something unprecedented. It sold shares of the company to the public. For the first time, ordinary investors, not just princes or wealthy guilds, could buy a piece of a trading venture and share in the profits. In essence, you could invest in a fleet of spice ships without owning a single vessel yourself. This was the world's first IPO, initial public offering, and it was a hit. Investors big and small in Amsterdam bought VOC shares, and the company used that capital to send out dozens of ships. When those ships returned laden with spices, silk, and porcelain, the profits were distributed as dividends, and the share prices soared. People could also trade their shares to others. In fact, an open-air stock exchange emerged on an Amsterdam bridge where VOC stock and bonds changed hands daily. The birth of the stock market. Suddenly, investing wasn't just for a voyage here or a caravan there. It became an ongoing marketplace of its own. The concept spread. Over in London, wealthy merchants and aristocrats invested in British East India Company voyages. And informal stock trading took place in coffee houses like Jonathan's, a precursor to the London Stock Exchange. By buying stock, an investor could partake in the fortunes of far-flung enterprises, from colonial plantations to early industrial ventures, without ever leaving home. It was revolutionary. Joint stock companies pooled capital from many investors, enabling projects far beyond the means of any single backer. Of course, early stock investing had its ups and downs. There were successes that made investors rich, and spectacular failures too. One famous episode was The South Sea Bubble of 1720 in England, where wild speculation in the South Sea Company sent stock prices sky high before they crashed disastrously, ruining many investors and providing one of history's first lessons in stock market mania. Yet, despite occasional panics and bubbles, the idea of public companies endured because it was so powerful. Stocks allowed the financing of railroads, factories, and innovations to come. By spreading risk and reward among many people, they set the stage for the next great era of growth, the Industrial Revolution. And that's where we'll pause for now in this incredible journey through the history of investing. We've gone from ancient vaults and Renaissance banks to the birth of public companies. And trust us, it only gets crazier from here. In Part 2, we dive into the Industrial Revolution, stock market manias, 20th century financial crashes, and the AI-powered investing revolution happening today. So don't miss it. Subscribe, turn on notifications, and head over to the next episode in this series. Let's build your financial brain, one era at a time. CapMindGlobal, the future of finance, decoded.